Hi guys, and welcome back to another video on the NZDayTrader channel. I'm Shami, and today I'm going to teach you something real cool, and that's value areas. So you guys must be thinking, how do you identify support and resistance in the correct way? Because the New Zealand market's a bit different compared to like other markets like the US or crypto, because with the New Zealand market there's actually not many people like in the market, so basically there's more of a investor behavior and there's no one actually shorting stocks here. So basically most people, what they do is they tend to just buy and they hold for a long period of time, and that's where as traders we can take advantage. So today I'm just going to show you a little bit of a trick or some tips on how to identify a very good value area on a chart. So I just want to tell you guys, or just teach you guys, what is a value area. So a value area is basically just the area where there's either a large amount of sellers or there's a large amount of buyers. So a value area basically identifies a level of interest. So when a value area occurs on a chart, you know that it either can mean a strong support, meaning that that the level is somewhere that is likely to hold and the price won't go down from there, or it also mean resistance, where a price could go up to a certain level, like let's say like on this chart here, let's say it could go to like 360, and this is a level of resistance. So it's kind of like a seller wall there, and you'll notice that on like market depth or like level 2 quotes or anything like that. And yeah, so these are sort of value areas, so areas of interest. So I'm just going to show you here an example of how you can map out a value area on your chart. And this is a really good way to trade as well, because you're basically identifying an area of value. So I just want to show you guys. So what we got in front of us here is the warehouse stock. So ticker WHS. And we're just going to have a look at how do we identify a value area on this chart. So you guys can probably already see that, you know, there's a pivot point up here where the price has gone as high as 386, and you guys can probably know that, you can see that, you know, price has gone here, a low of around about 341. So in order for us to kind of really strengthen our thesis around that being a support area or that being a resistance up here, a good way to look at that is the market depth. So the difference between like New Zealand market depth is that it's very slow. You know, it's pretty clear where the buyers are, and it's pretty clear where the sellers are, and that's why we can take advantage, you know, when we're trading stocks, compared to like you know, US stocks, or compared to cryptocurrencies, where, you know, the market depth, or what they call level 2 quotes, or tape reading, it's constantly just going up and down, up and down, up and down. And a lot of players in those markets, they're basically pulling their orders in and out. So they're 100,000 in, and next minute all the buy orders are gone, and then the price just dips. So there's a lot of people just faking and going in and out. But as I said before in previous videos, the New Zealand market is a very clean market to trade, and that's why it's much more easier to find consistency whenever we're trading this market as well. So going back to the charts here, so basically here we're just going to see how we can map out a value area, and basically this is how I tend to do it. I don't know about other people, but this is my personal. Just remember guys, that all these videos that I make are basically based on my own thesis, my own study, and basically most importantly my own experience and my trial and error. So trial and error basically meaning that, you know, I've gained money, I've lost money, and at the same time, as I was going through the process of, you know, making money and losing money, I learned a whole bunch of things on what not to do and what I should continue doing. So I'm just going to show you the value area thesis right now. Alright, so just taking a screenshot of market depth, just because I don't want to show my account number or anything like that. So it's just much easier to take a screenshot. I'll just see if I can pin this to the side. Let's pin this over here using this downloads cool desk pins tool, so you can just pin it here, and then you can just kind of wiggle the chart. Alrighty. Well, anyways, this is what we want to see. So basically this here is the warehouse stock. So as you can see, the date, the 5th of the 5th, you can see down the bottom half, the bottom of the screen here, the 5th of the 5th as well. So that basically just says that this market depth, or this yeah, this market depth is real time. So basically we can see the bid side, which is the buyer side, and we can see you know, how many buyers are on this side and how many sellers are on the ask side. So this is great because we can see is that usually when there's more buyers on the bid side, it means there's a lot more people buying. It means that the stock usually has some room to continue high. So here we're just going to map out a support level. So, alrighty. So what we can see here is we can see a significant portion of the bid side or the buyer side being at 340, 343 and 344. So this means that there's a bit of support between that 344 level and that 340 compared to the sell side. So we're just going to map out that 340 and 344 area. So this is a really good thing to do as well in crypto and in like US stocks as well. So people talk a lot about value areas. This is how I use or how I do my value areas. Other people might be a bit different. I don't know how they do it. So this is just what I've figured out works for me. And yeah, so what we're going to do here is a price range. So 344, and just might have to put that down here. Okay, 344. What was it? 344 to about 340. There you go. So if you look at this chart here, looking at the market depth on the right, you can see that this is my support area. And we can also map this out as a good support area because this used to be previous resistance. So previous resistance, usually when it breaks that, it turns into support. So sometimes it holds, sometimes it doesn't. It just depends on the stock. So here we can see that we had a wick over here. So remember that in my last video that I taught, that wicks basically represent, if you see a lower wick, it just means that, you know, buyers are present. If you see an upper wick, it means that sellers are present, looking to sell out. So here we can see a wick. So basically the price of the stock went down to about 340 and then came back up. Saw more wicks here, and then here we saw they went back down to 340 and it was sort of breaking that support, but it never closed down below it. So if you can see, like when the price closes below a value area, it usually signals that, you know, that value area is not holding. It's not a real value area, and that people are not interested in that area and they're not buying. So, or if people were interested in that area, the people that were interested are just not strong enough. So that value area is not likely to hold. What we saw here is it held here. So again, it was previous resistance here because you can see it went up to that level, it came back down, broke that area, continued higher. And then here you saw that it hold and came out of the value area as well. So you can deem that a good value area. So 350, yeah. So at the same time, if you look back at resistance, you know there's a bit of resistance like 49, which is substantial compared to the buy side, which is normal. It just means that people are just looking to sell out. You know, they probably just had enough, or they're probably looking to just sell it in particular. So you can also map that area out as well. So that was that 350 area. And remember I told you guys that $3.50, $4, $4.50, $5, all these 50-cent levels are strong psychological levels. So strong psychological levels mean that people tend to gather around these sort of whole numbers. So $4 is just psychologically, no one's going to sell at $3. A bunch of buyers or a bunch of sellers are not going to, let's say, buy at $3.76 or sell at $3.83. You know, like people are going to sell like $4. You know, like I'm going to sell when it gets to $4, or I'm going to sell when it gets to $5. That's just my sort of thesis around psychological levels, and that's what I can sort of identify in the markets. Yeah. So because there's only sort of 5 sellers on the sell side, usually what happens is when a stock is in an upwards trend, usually the sell side gets, you know, bought out. So the sell side doesn't really matter, because what happens, you want to see a break. And throughout the day, it's important to have a little bit of a sell wall there, because if you don't have a sell wall, then there's no stock to buy, and you know that, like, it's just not a liquid stock. So you want to be having a bit of sellers there, because the strongest indication of a stock continuing higher is that, was there a large amount of sellers here, and as you start to refresh the price on market depth, and you know this goes to 49,000, this goes down to like 40,000 or 30,000, 20,000, 15,000, or it's just fully sold, and you can see it on the recent trades as well, then that indicates there's buying to the upside. And that's where we can also take advantage as traders. So like, let's say that, you want to put your stop loss down the bottom over, down the bottom over here. Cool. And where's the, yeah. So let's say, all right, I'm gonna, I'm gonna buy up here, and I'm willing to risk, 3% of my account. So I'm gonna put my stop loss down there, and if I got $1,000 in it, then I'm willing to risk $30 on this trade. So that's all good. And then you're like, all right, if this price goes back up to, if this price goes back up to here, then I'm making 10%. So, I'm risking like 3% to make 10%. That's a good trade because you've identified the support area, you've identified a recent high. At the same time, trades are not guaranteed, and also the length, the time that the trade will take to get there, will probably, you never know when that's going to happen. So, it may take like a month, 2 months, or yeah. But that's just a way to sort of map out value areas. This is an example of one. So, cool. 10 minutes. Yeah, so I just want to teach you guys all about how to map out a value area, and that's just an example of one. So there's so many different ways you can analyze the stock market, and the way I analyze is just, you got to put in the watch hours on the charts. You got to just look at charts, and you got to, at the end of the day, indicators, all that type of bullshit doesn't matter. No one gives a shit about moving averages or divergence or any of that type of stuff. Like I told before in my videos, trading is all about, the volume, this stuff here, and just the direction of price. That's it. Simple as that. And all this stuff here, when it goes sideways, just means the stock's having a break, and you can kind of get in, and you can continue higher, or if it moves lower, then cut your loss. Simple as that. But 90% of the whole trading game is just psychology. It's because you're like, sweet, I'm gonna buy all these sort of ranges here, and if my stock comes to here, I'm just gonna sell. Half the traders won't even sell. They'll be like, oh shit, it's gone down, or they missed it, they weren't watching the trade. They're not just hold it as an investment for a long period of time, finally until it goes up again. So it'll probably be like a year, and then they'll start to try to learn how to trade again. So it's important to take those losses. Losses are part of the game. Yeah. So again, these breaks. Stock is going up, it's just having a break. Going up again, having a break. Going up again, having a break. Going up again, having a break, and so on, so on, so on. And that's just how it works, trading. And yeah, it's not hard. It's just like you just got to build the right mindset around it, and you obviously got to have your own strategies and stuff in place. So, and your own sort of correct methods on how to trade. If you're trading everything, then you're going to be making too many losses and too many wins. So you don't want to be like my sort of take on trading is like trade as less as you can, but trade some really good quality stuff. Because if you're trading quality stuff, then you can stick large size behind it, because you hardly trade, and when a really good trade comes and you stick large size behind it, your probability of it working is probably going to be over 70, 80, 90%. And obviously if it doesn't work out, then you also have your plan where you will just cut your loss quick. So that's another thing as well. So yeah. Alright guys, so I hope you liked this video today, and just a little bit on value areas. I hope I taught you something as normal, and like this video, and I love you guys' support, love the comments saying you're a really good trader and stuff like that. So I love those comments. Keep it up, makes me feel humbled. And again, if you guys have any questions at all, just flicker through on Instagram. Some Instagram link should be, or my Instagram is just in the account down below. I got a website as well, so definitely check out the website in my description. It's got my Instagram and how you can join the Facebook group as well. So I've created a Facebook group where I'm just putting little tips in a private group, and one day I might do something real cool in the group, maybe some prize, or I don't know. We'll see what happens in the future, but as long as I've got a bunch of people together that are willing to trade, then I'm sure we can make something work. So yeah, definitely. Alright guys, till next time, have a good night.